Welcome back to Alpha Recap. Great to have you with us. We're diving into a big, headline-heavy day in the markets. As always, if you have questions, you can reach us at stockalpha.ai and ask us directly. Today I'm joined by Kate, our fixed income specialist, to unpack oil, yields, and how AI headlines reshaped sector flows after the close.
Thanks for having me. Excited to walk through what was a pretty eventful session across commodities, rates, and select sectors.
Let's start with the big commodity move, oil. Briefly, what happened?
Geopolitical shocks pushed Brent above $100, and U.S. crude moved toward about $98. That kind of breakout immediately reshuffles how traders price energy risk and feeds through to inflation expectations.
And that fed into yields, right?
Exactly. The 10-year Treasury climbed to about 6.2%, the highest level since January 2025. That was a market mover today because higher oil and a surprise drop in jobless claims both lifted inflation and growth signals, and those two things pushed rates up.
So markets closed with energy up and yields higher.
Right. Energy finished the day as a clear beneficiary, while long-duration growth assets took a hit on the rate move.
Okay, so we've got oil, yields, and AI. How did AI fit into the day?
AI remained the primary lens for earnings, but nuance drove reactions. Analysts focused on how much of big tech's revenue and profit is coming from very high-margin AI-sensitive lines. Think data center chips, search and cloud services, because those lines disproportionately drive index profit growth.
So not just headline revenue, but the share that's high margin. That feels like a small change in the model, but it really matters.
Exactly. A small shift in those contribution rates can have outsized effects on market returns if those businesses weren't as durable as assumed.
ServiceNow came up as a bright spot today after earnings. What did you make of that?
ServiceNow beat expectations and highlighted an expanding AI pipeline, a good example of a software company that seemed to translate AI investment into near-term top-line momentum. That stood in contrast to some of the regulatory noise we saw elsewhere.
Right. And on that regulatory front, the OpenAI disclosure and the congressional talk of an AI kill switch was pretty stark.
Yeah, honestly, I was a bit surprised by how quickly legislators reacted. The breach raised concerns about operational safety and prompted discussions that could lead to mandates or restrictions, which raises uncertainty about deployment timelines and compliance costs for platforms using generative AI.
That tension, secular AI opportunity versus a fast-moving regulatory overhang, felt like a through line across the day.
It was. Some analysts remain upbeat that AI spending will compound earnings for hyperscalers and chip vendors. Others argue these incidents could meaningfully slow adoption or force expense increases. The market is split on how big and persistent that risk will be.
Let's pivot to sectors. Short version, winners and losers?
Energy was the immediate beneficiary. Traders repriced exposure to producers and commodity-linked instruments after crude's break above $100. Airlines were clear near-term losers. American Airlines cut its 2026 outlook after fuel spiked, and its stock fell roughly 7 to 9% to about $100.46. Not a great day for airlines.
Yeah, that was a tangible example of how input costs hit cyclical margins fast.
Absolutely. Semiconductors were mixed. A couple of names validated long-term theses. For example, one big chipmaker's shares were around $250, and some supply chain names more than doubled on improving spending signals. But other parts of the sector showed momentum risk. Even if a company reported a strong quarter, market flows could keep the stock under pressure.
So fundamentals didn't always equal price performance.
Right, and pockets of cyclical strength showed up elsewhere. Defense contractors beat and raised guidance, which reminded us that not all cyclical exposure was hurt by higher rates.
Let's dig into the macro angle for a minute. Why does Brent above 100 matter beyond energy names?
Higher oil feeds into inflation through higher transportation and input costs. That can compress margins in airlines, consumer discretionary, and logistics. It also increases the odds of more aggressive central bank rhetoric, which pushes yields up and lowers present values of distant earnings. a double whammy for long-duration growth stocks.
And when the 10-year lands at about 6.2%, you said it changes the math.
Yes, the 10-year is a benchmark for discounting future cash flows. When it moves up like that, discounted cash flow models use higher hurdle rates, which makes multi-year growth stories less attractive unless earnings growth or margins accelerate noticeably.
So this is the classic rates versus growth playbook.
Exactly. That's the debate people had all day. Whether AI-driven earnings are durable enough to offset higher discount rates, or whether rising yields will compress valuations across the board.
Quick reactions, short takes. Right.
Yeah, absolutely.
Let's talk implications for different investor types. Start with long-term growth investors.
Long-term growth investors still have plausible cases for AI beneficiaries, but conviction hinged on regulatory clarity and the persistence of high-margin contributions. Scenario analysis is key. Run outcomes where margins compress or adoption slows.
Income and value investors?
Rising yields and energy strength create relative value in dividend-paying energy names and defensives that look good on cash flow yields. But watch cyclicals with thin margins. They got hit today by higher input costs.
And traders?
Volatility was elevated. Geopolitical headlines, commodity swings, and concentrated index risk favor active risk management. Tighter sizing and stop discipline were the order of the day.
Fixed income investors?
The repricing in the front and belly of the curve called for reassessing duration exposure. Higher yields improve nominal income potential, but worsen mark-to-market for long-duration bonds. So positioning depended on whether you think yields stay at these levels or reverse.
All right, couple of strategic considerations you think folks should watch this week.
Monitor the high-margin contribution metrics when the big tech names report. That will probably be the immediate focal point. Stress test portfolios for a higher-for-longer rate backdrop while oil stays elevated. And watch regulatory developments around AI. Operational failures that trigger legislation could materially raise compliance costs.
Any governance or reputation flags people should keep an eye on?
Yes, governance hearings and reputational issues remain event drivers. They can create outsized short-term moves, so monitoring corporate governance headlines is worthwhile as part of risk management.
Before we wrap, a quick recap of where analysts broadly agreed and where views diverged.
Agreement. Oil's spike and the 10-year rise materially altered the macro backdrop and raised inflation risk, and AI remained central to earnings narratives. Divergence. How big a regulatory hit AI faces, and whether semiconductor outperformance signals a durable recovery or an exception in a fragile rally.
Final takeaways. What should listeners remember from today?
1. Oil above $100 reshaped both sector flows and the inflation outlook. 2. The 10-year at about 6.2% meaningfully raises discount rates and challenges long-duration valuations. 3. AI is still a key earnings driver, but regulatory risk and concentration in high-margin lines introduce new modeling uncertainty.
Great. Quick reminder, this is analysis for informational purposes only. We didn't recommend any buying or selling, and nothing here is personalized investment advice.
Right. Analysts note the trends and scenarios we discussed, but individual decisions should reflect personal circumstances and further research.
Thanks, Kate. Nice clarity on a complex day.
My pleasure. Thanks for having me.
And to our listeners, if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next time on Alpha Recap.